Hey, what's going on, y'all? It's Nick again, and you know what that means. It's time for another financial video. Today, we're gonna switch it up a little bit, and we're gonna talk about real estate, okay? Now, it seems like real estate has been what everyone has been wanting to get into for about the past few years now, okay? However, real estate can be rather expensive, okay? And if you're looking at real estate and saying, man, like these traditional ways I don't think are going to really work for me right now to invest in this. And now when I say traditional ways, okay, one, I'm talking about buying your own house. Now there is an argument as to whether a buying your own house is an investment or not, but for the sake of this video, let's just say it is, okay? Another traditional way is by buying a rental property, to where you'll buy a property, you'll rent it out to some renters, and in return, they won't only pay your mortgage for you, but hopefully you'll have a little bit of cash coming into you every month and you get some of that sweet passive income. All right. And the last traditional way of investing in real estate is typically through flipping a property. So you'll get a property in distress that you should be able to buy under market value. You fix it up and then you sell it for a higher price. All right. However, if you're looking at these options and just saying, well, I can't really afford my own house right now, I don't really want to deal with tenants, okay, and I'm not a Mr. Fix-It, this guy right here, so I don't want to bother with flipping properties, so I guess real estate investment just isn't for me. Well, hold on there. Before you go any further, give me a chance to show you these 5 alternative ways that you can invest in real estate, and maybe out of these 5, you can find a way that, investing in real estate may work for you, okay? Now, before we begin, I want to ask you to hit that like button like I always do before each video. And hey, without further ado, here are the 5 alternative ways that I listed to invest in real estate. Let's go. All right, so the first way to alternatively invest in real estate is through real estate investment trust or REITs, okay? Now, REITs are typically considered the mutual fund of real estate, all right? Now, what that means is there is a specific company, and that company, instead of picking different stock companies to invest in, they invest in actual different types of commercial real estate, okay? Now, that commercial real estate can be anything from hospitals, hotels, storage buildings, etc., okay? Now, you have 2 different types of REITs. You can have publicly traded REITs and private traded REITs. I'm going to get to the private traded REITs a little bit after this, okay? But first, publicly traded REITs are traded on the stock market. So that means they are highly liquid, all right? Liquidity simply means that you're able to sell these stocks quickly and you can get money for them in return, all right? Now, there are 3 types of REITs, okay? You have equity REITs, which the majority of the REITs are equity REITs, okay? And they focus on income producing properties. All right, so they'll buy the properties, okay, and the majority of the income is coming right off of rentals, all right? Next, you have what's considered mortgage REITs, all right? And what mortgage REITs do is they lend money out to residential areas or residential properties or commercial properties, right? And they earn profit primarily off of the interest that they're lending the money of, okay? And you also have what's considered a hybrid REIT, which is a company that invests in both equity and mortgage REITs. All right, now one of the best things about investing in REITs is that it has a high dividend yield, or you get high dividend returns, okay? So let's just say that you invest in Apple stock and they give you about a 2% dividend. It may not even be that high. Let's just say you get a 2% dividend each quarter or every year for investing in that company. All right. With REITs, you get as high as 4% dividend returns, 6%, 8% dividend returns. This is really why the majority of people invest in REITs, because it's a good way to get passive income. However, since REIT companies, right, by law, have to pay 90% of their taxable income to their shareholders, you're not going to get very much in capital appreciation, okay? Because that only allows the company 10% profit to reinvest in the business. Okay, so where you're gaining in a high dividend rate, you're going to be lacking in capital returns. Okay, also REITs are taxed a little bit differently than normal stocks are, and it's typically more strict. Okay, and for this reason, this is why a lot of people choose to invest in REITs in their tax advantaged accounts, like their Roth IRA, their 401k, accounts like that, because it'll help them better when it comes to their taxes. All right, if you put it in a standard brokerage account, right, you're going to be paying more taxes than if you would when you invest in just a normal stock like Apple or Microsoft or something like that. All right, and lastly, there are also private REITs. Okay, now these are typically considered crowdfunded REITs. Now, these REITs pretty much work the same way as regular REITs, but they're privately owned. Okay, so these are considered a tad bit more risky because they're not going to be as liquid. Okay, you're not going to be able to really sell these funds as easy as you can a publicly traded REIT. However, the good thing about these is that since new laws have been implemented, right, back in the day, only accredited investors, which means you had to have a whole bunch of money, were allowed to gain access to these type of funds. Now, normal everyday people like you and I, okay, can actually invest in these funds also, right? So it makes it a little bit more fair. A couple examples of crowdfunded or private REITs is Fundrise, Buy the Block, and other type of crowdfunded online sectors like that. Okay. However, whether it's publicly traded or privately traded, if you're interested in investing in real estate, but you want to do it in a more passive way to where you don't have to control property, but you can get that passive income through dividend investing, REITs is going to definitely be an area that you want to look into. Okay, so the next alternative way to invest in real estate that I have listed here is actually a surprise for me because I didn't even know this. And that is investing in publicly traded companies that are real estate focused. Okay, so what does that mean? There are companies out there that run real estate that are publicly traded on the stock market, but aren't considered real estate investing trusts. Okay, now here's some examples. Did you all know that Hilton Hotels, Marriott Hotels, and even La Quinta are publicly traded on the stock market? Now, if you did, then hey, maybe I'm the idiot, okay? But I did not know this, and that really surprised me, okay? And now the good thing about this is that technically, yeah, you invest in these companies, you're invested in real estate. However, since they're not REITs, okay, they don't have to give out 90% of their taxable income to their shareholders, okay? And they don't follow those same strict tax obligations that regular real estate investment trusts do. So that means you can invest in real estate and, right, you can get dividends because the majority of these companies give dividends. And if the stock price rises up, you also will get the change in price. You will also get the gains for that too. All right, so that's the good thing about these type of companies. Now, although I don't have any of them listed, there's certain companies out there, right, that are, based on just storage facilities, okay, and just, hospitals and companies like that you can look into and invest in, right, to where, you're technically investing in real estate, but it's not through a REIT. Here's another thing to example. Companies like Amazon, all right, technically, Amazon uses shareholders' money to buy and invest in warehouses to hold their inventory and ship it out. So if you own Amazon stock, hey, think about it as a passive real estate investment too. It's a good thing. Lastly, I want to cover some stuff too. An ETF, right, is just like an index fund to where it's a portfolio of different funds, right, within different stocks. Within one fund, right, and you can invest in the whole fund and just have that diversification into a whole different type of stocks. Typically, you can invest in an ETF for REITs also. I didn't mention it earlier. However, there's a hotel ETF. So you can find an ETF to where you'll be invested in Marriott, Hilton, La Quinta, and all these other hotels all in one, which is really just amazing to me. Okay, so investing in publicly traded real estate focused companies is another great alternative way to investing in a real estate. Okay, so another way to alternatively invest in real estate is through partnerships. Okay, now this is really self-explanatory for the most part. Let's say you have a group of friends. There's a group of 3 friends. Okay, one has the money. Let's say one is a real estate agent and one has a history of investing in real estate. Okay, so let's say one of these guys say, hey man, I got a couple of rentals and I want to find another one, but I don't have the cash right now. Would you all be willing to invest in another property with me and I'll run the property? And then the guy who's a real estate agent says, hey, I sure will. I'll pass some deals and we can pass some deals to each one of us. And, we can all decide which property you want to invest in. And the last friend, he's never invested in real estate. He doesn't know much about real estate, but he does have money that he wants to invest in something and learn about real estate. Now you got all 3 friends playing a vital role when it comes to partnering on this real estate deal. And this is all what partnerships is about. Okay. Now you can do that, or you can also find a company that invests in real estate, physical real estate, and you can be a lender or investor with them. And from there, for the most part, you're going to be passive. You're not really going to be focused on the day to day with that investment. But according to whatever terms you all have, you'll get that appreciation whenever that flip comes or whatnot, or you'll get that rental income if that's what you all agreed on. And really the only responsibility you'll have in that is to make sure you do your due diligence, okay? Make sure that you're understanding what you're investing in. You're making sure that the people you're investing with are solid people. They have a history of investing in rental properties or just investment properties in general, whatnot, etc. Okay? But partnerships is another really good way to alternatively invest in real estate, right? If you're somebody that may have expertise in one area, or you may have something that, people need, okay, and you may lack in other areas. Okay, another way to alternatively invest in real estate is through hard money lending. Now, hard money lending is very similar to partnerships as in the way of, you pretty much have the money and you're giving it to an investor in order for them to flip the property, okay? However, what's significant about hard money lending is that if you're the one lending the money, you're taking the place of the bank, all right? Now, the way this will work is you're gonna loan the money, all right? And the investor in return is going to pay you back your principal plus interest, all right? So like I said earlier, this transaction is going to bypass the banks, all right? So what they're really, and this is going to be a direct loan to the investor, okay? So what they're really doing is they are going to take the higher interest rate going to a hard money lender, okay, and bypassing the bank, because you can do a hard money transaction in about a week or two, opposed to going through a bank and getting your loan, which is typically going to take like 30 days, okay? Now, good thing about hard money lending, if you're the lender, is that you have higher interest payments, okay? And a lot of these interest payments are going to be 10% or higher, okay? And like I said, the investor is paying for that increased time, right? To where if they go through a bank and, they need to get that flip done, the bank may charge them 5% interest. And here you saying, hey, look, I can give you this money in about a 2 week span, but I'm going to need you to pay me interest of about 10%. All right, so that's the good thing about hard money lending. And here's the thing, you don't have to do anything. They're going to take care of that whole flip and all that. Okay, they're going to take care of, flipping the property, renting it out, doing all that. You just sit back and you just get your money. Now, once again, as I previously stated, this is going to be something else that you want to do your due diligence on, right? Typically, when it comes to hard money lending, you want to have some kind of collateral just in case the deal falls through and you can get your money back. One of the ways that this can happen is, you keep the title on a property, right? Or you put a lien on a property. And until you're actually paid back, right, you keep that lien or that title. And if something happens, you now have access to that property and you can sell that property. And hopefully by selling that property, you get your money back. And that's hard money lending. Okay, y'all, and last on my list, the final alternative way that I have for you all to invest in real estate is through tax liens, okay? So real quick, a tax lien is a claim on a property that the government puts on a property if somebody does not pay their taxes, okay? Now, after that, a tax lien certificate is created with the amount due plus interest and penalties that need to be paid. From there, they actually put that tax lien certificate up for auction, either in person or online, okay? And it's given to the highest bidder, all right? Now, from there, okay, if everything goes right, which is the pros, right? If everything goes right, if the homeowner does pay their lien off of their property, okay, you're going to sit back and you're going to get that passive income. You're going to get your principal back, and plus you're going to get the interest on that property. However, the con is that passive income can change to an active investment really quickly, okay? Because, if the owner if you have to foreclose on the property because the owner chooses not to pay or they end up moving out of the property, you now own that property, okay? And you're going to have to kind of go through the headaches that it's going to take to get that property sold through that whole foreclosure issue and all that, okay? So you got to decide whether or not that's going to be the risk that you're willing to take, okay? Now, typically, investing in tax liens work best when the economy is strong, right? Because look, when the economy is strong, that means more people have their jobs and they'll actually be able to pay their debts off, okay? And once again, just like you've heard throughout this entire video, you need to make sure you do your due diligence, okay? Due diligence on tax liens is, making sure that the property is even worth buying a lien on, okay? What kind of condition is it in, right? How much more of a mortgage do they have to pay, right? Maybe pull a credit score of the owners, and see, if their credit history shows that they're good when it comes to paying off their debts, just stuff like that, right? Before you actually invest in these tax liens, right? Because look, they can be really good as far as a hands-off investment, but if it goes bad, you may have a headache on your hands. And y'all, that's the video. I don't want to go too much in depth when it comes to this or any of the other techniques that I mentioned earlier in this video, because down in the description, I'm going to actually leave links to all of the articles that I use for research through this video for you all to check out yourselves, okay? Just to make sure that, y'all don't assume that I just pulled all this information out my butt, all right? And with that being said, y'all, look, that's the video. I hope you learned something, okay? Hopefully for those of you who felt that you was just, crap out of luck in investing in real estate, hopefully out of some of these ideas, right, you may have found a way that you're interested in when it comes to alternatively investing in real estate, all right? With that being said, y'all, look, give me a like down at the bottom, comment, let me know how you like the video, share, and subscribe to the channel. Without further ado, look, I hope y'all have a great day out there, and make sure you be safe. And until next time, peace out.